Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex daily video research. Today is October 18th and we will start to talk about the euro currency. Well, the previous week we have dedicated to the Great British Pound, and the analysis that we have made during the previous week is still valid, so you can use it for trading the Great British Pound on the coming week. The time has come to refresh our view on euro currency. We will start from the daily chart of EURUSD. As you know, during the previous week also we have talked about the target, the 100% expansion from the weekly ABC bottom pattern that was around 140-46 area, and market has touched it. So this expansion has been accomplished by the market. Also market has reached the monthly period resistance 1, tried to break it to the upside but failed and closed below it. So during the Thursday and Friday price action, market has shown the nice wash and rinse pattern that has cleared out these highs and cleared out the stops that has been placed just above this area. Also possibly we can even treat it like a railroad track, so also known as the rejection of price, because market hit 141.50 area, roughly 70 area, totally rejected it and returns in the body of this consolidation. So possibly we can treat it like the railroad track, but personally I like when this length of the bars a bit greater than currently. Okay, but this is definitely the wash and rinse pattern. Also I talked during the previous research on the euro currency that we possibly can see the double repo reverse pattern that is forming. But for this pattern we need the excellent thrust to the upside. We have this is the really perfect thrust because we have no penetration of this green line. The green line is the 3x3 moving average, so market absolutely perfectly holds and creeps with this line. We need close below the 3x3, close above the 3x3, and then close below again to confirm this reverse pattern. After the second close below the 3x3 we can enter on the short side with the stops above 618 resistance from this high to the bar of confirmation of the 3x3, and the target somewhere below the market. About the targets we will talk a bit later, but now look at this bar in this circle. This bar has closed above the 3x3 for the 13 pips, just for 13 pips, although we need the close below the 3x3. Well, although we do not have the close below, the first close below the 3x3, I still think that we can treat this pattern as a double repo, and here's why. First of all, we have the excellent thrust. Second, look these highs. The two highs is very close to each other, very small time of consolidation between two highs. Second, double repo has estimated the new highs that involves in the trading the breakout traders who enter the market after breakout of this high. This is good because now they are trapped in this reverse back move. Third moment, look at this last bar. This is the reverse bar. Market established new highs and close almost below these lows. It's close to 139.54, and the lows of this bar 139.88, sorry, 48 right here. Okay, so I think that we can treat this pattern like a double repo lookalike that Jed Napoli does. This is the same pattern, but when not almost perfect in all conditions. And this bar has been closed above the 3x3, although we needed to close below. So at the same time I think that this pattern can work, can still work like a normal double repo. If you do not like to trade not perfect patterns, so you better stay flat, but do not stay against this pattern. For all other traders, I think that we can enter, if you are a daily based trader, you can enter on the short side if market will show the close below this green line. This will be the confirmation of the double repo lookalike pattern. Okay, now let's look at another daily chart. Here it is. The red line is the MACD predict indicator. Look at this trade action on Thursday and Friday again. Market trying to change trend to the bullish but failed. This is the MACD predictive failure pattern, and usually this price action leads to the previous lows just around this low, around 137.68, this low. Also, please take note that this move to the upside doesn't have any meaningful retracement to the downside. No solid retracement. It means that those people who stand in the on the long positions, who holds long positions right now in the market, hasn't fixed profit yet. Okay, because if they fix profit, we should see some deeper retracement. This hasn't happened yet on the market. It means that their stops are placed somewhere very close to the previous lows, and if market will reach this low, this will trigger the stops that has been placed just below it and add fuel to the possible move to the downside. So we can see some acceleration after the breakout of this low on the market. Also, this is the reason why I think that this pattern that we have talked, although not perfect, the double repo, it can work like a double repo. Also, we can see this negative dynamic pressure when the market shift trend to the bearish, and although prices rise further, the market doesn't able to shift trend again to the bullish. This is a bearish sign. So this is the context on the daily time frame that the possible enter on the short side of the market. But there are a couple of cases how you can enter on the short side. If you are a position trader, if you are a day trader, you can enter on the short side when the market will show the close below this green line. It's around 139.14 for the Monday. If market will close below it, then possibly on Tuesday you can enter on the short side with the stops above the 618 retracement from this high to the low of the confirmation one. This will be the classical double repo enter on the market. The nearest target, I suppose, the area of 130.34.40, 130.35.40, this area. This, as I've told on my weekly research that I placed on the forexpeacearmy.com, this is disrespected strong previously weekly confluence resistance area, and very often when the market starts retrace, it very often retraces to the disrespected strong previous resistance. So this is area where I think market should reach it. Meantime, in the nearest time frame, I think that market should reach weekly pivot support 1. This is normal price action when the market retraced during the rallies, like we have here. Market first of all retraced to the weekly pivot support 1. This scenario you can see on the Great British Pound during the previous week, when it shows retracement to the weekly pivot support 1 during the rally. Okay. Now, for those who are more aggressive trader, we have another possible for enter on the short side, but then for this purpose we should take a look on the hourly chart. This is the hourly chart of EURUSD. Look at this, we have solid sell-off during the Friday price action. This shows us the trend. This MACD predict the trend is bearish. It confirms the daily price action. Okay. Well, this is the weekly pivot point, by the way, for the coming week. It's around 139.59. Sorry. Okay. There are a couple of areas that I think is very suitable for the enter on the short side. The first one is area around 140, because this Fibonacci 618 resistance area and the previous lows, and the second area 140.16, because this is the 382 resistance, Fibonacci resistance from this high to this low. Taking into account that this was the wash and rinse pattern, and we do not like to see deep retracement back. We do not like to see that market returns to the previous highs, because this fact will negate the nature of this pattern. of the wash and rinse pattern, we need to see the shallow retracement, and I think that area of 140, 140.25 is very suitable for entry on the short side. Also, MACD shows that the bearish trend on hourly chart will hold until 140.64 area. It coincides with the deep Fibonacci resistance 140.69 area. So entering from this area and placing the stop somewhere around 141, 141.50, this weekly build resistance 1, is very suitable for the intraday trading. The targets are the same, the area of first of all the weekly build support 1 area, and the second the undisrespected 136.44, 135.44 area of confluence, previously confluence resistance area. Okay, this entry on the market has some advantages and disadvantages. The advantage is that you can enter from the better price than after confirmation and to place tighter stop. From the other way, market will be above the weekly pivot point and the daily double repo hasn't been yet confirmed when you enter the market. So the couple of things that you should to track if you are intend to take this intraday signal. First of all, you need to see that market will move and close below the weekly pivot point, and the second, you need to get the confirmation of the double repo pattern. Market should close below the green line, below the 3x3 moving average.